Let's bring in Ayelet Sheffey to break down what we can expect. She's a senior economic policy reporter with Business Insider. Good to see you.
Thanks for having me.
So what factors go into making the decision to raise interest rates by a much smaller amount this time around? I mean, there was a sense that perhaps the rate hike was going to be a little larger, but those numbers came out yesterday, and now the Fed's thinking otherwise.
Yeah, absolutely. So as we've seen with the past 4 consecutive times that the Fed has raised these interest rates, they've done so very aggressively. The past 4 times we've seen 75 basis points that they've chosen to hike these rates. And this is in response to where the Federal Reserve is seeing the inflation levels in the country. Inflation is undoubtedly still quite high, but given the Consumer Price Index report that we got yesterday, which showed that inflation rose 7.1% year over year in November. That was a decrease from the 7.7 reading that we got in October. And that is a good indication that the Fed will choose to act a little less aggressively this time by lowering the interest rate hike to, as you mentioned, 50 basis points this time around. The Fed is still hoping to get to that level that we saw pre-pandemic, which was around 2% levels of inflation in this country. But given that we're a bit of a ways away from that, the Fed will likely still continue raising these rates, but likely at a lesser level until we can get these high prices under control.
All right, so here's what that means if you're just a regular person, right? It means that your credit card rate's probably going to go up, right, as well as some other things. But if you are one of those people that are looking sort of down the barrel at high credit card interest rates, what should you be doing? I presume you're going to say try to pay down as much as you can.
Yeah, absolutely. So I think at this point, definitely keeping an eye on where these rates are standing and taking advantage as the rates go lower, seeing, where can I put my money? What can I use to make a big purchase? I think it's important to note that in the CPI report that we got yesterday, costs for, housing, gas, energy, they did go down slightly. So just keeping an eye on where this data stands and trying to take advantage as the economy slowly recovers from the pandemic, where is the best place to make those big purchases?
So where else will consumers be affected most by this increase?
Yeah, so right now, what we've seen from the latest inflation data is that costs for energy, gas, those are looking pretty good. Those have declined, along with the cost for used car vehicles, which has been a significant driver of inflation. We're seeing decreases there as well. But still, costs for shelter, costs for food, those did increase slightly. So, if you're looking to purchase a house or something like that, you will likely see a little bit of a strain on your wallet when you're looking to make those purchases.
So, you mentioned earlier that what the Fed really wants to see is 2% interest rate. We're, as much as this is good news, we're far from that. So, what needs to happen to get us there? I guess that's really the magic question. I guess that's what everyone's trying to figure out.
Mm-hmm. Yeah, that's certainly the big question right now. And I think the Fed Chair Jerome Powell has mentioned on numerous occasions that until we can get to that 2% level, which is their ultimate goal, and hikes will continue, interest rate hikes will continue to persist. And of course, this begs the question, will this throw the economy into a recession? At this point, that's not something that we know. Powell, Treasury Secretary Janet Yellen, even Biden have said that they hope that by the end of 2023, prices will be normal and what consumers are used to see. And they still believe that a path to achieving a soft landing, which is when the Federal Reserve can combat inflation while avoiding a recession, is still possible. But doing so has certainly narrowed. So, getting to that level will just depend on what tactic the Fed chooses to do and how often and how many times the Fed will keep hiking these interest rates.
It's a whole year away. Ayelet Sheffey, thank you.